Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these sectors and topics, looking for investment opportunities. I communicate with the community through midweek updates. Those are recorded sessions that are released on Tuesday nights, normally Tuesday or Wednesday morning. Uh, we also do Q&A sessions on the weekends, either Saturday or Sunday, depending on which weekend it is. We alternate that to try to get as many people to join. They are recorded. They are uploaded to the website. Same with the midweek updates. And you can see everything in history. I hide absolutely nothing. In fact, I'm building a portfolio in front of everyone where you can see every single transaction, every single thing in that inside of that portfolio, and you can see my returns. It is in front of everyone. So I share all my purchase points on the website, and I do try my best to get the best possible purchases in companies. Doesn't mean I'm perfect, but I try my best. There's a special going on. Special is the coupon code. Again, the way that I would do it, I would sign up to the monthly membership to try it out. Type in special, costs $25 for that first month. It's a 50% discount for the first month only. If I liked it, I would then sign up to the yearly membership, use the special coupon code again. It ends up being $500 for the entire year. What's the value on the membership? You learn how to invest. You see a person do it in front of you, and you will get that type of strategy, allocation, the entry points. You'll see the technicals. You will be able to identify them yourself with time, and then you'll get good returns usually with me. So that's the benefit. I run the website more of a teaching based versus a service where I just tell you X, Y, Z. I mean, you can do that with the midweek updates. You can use that for me, use me to get the entry points and hold on. But I also do a lot of teaching if you guys want to learn how to invest, which I think is the value. So rock bottom entries, lithium and battery stocks are firing a mind-blowing signal. They're positioned to outperform even the highest octane asset of all time, silver miners. Lithium could be the most lucrative trade of 2026. And someone asked me this, what was my most favorite sector at the first Q&A session in 2026. And I said lithium probably has or could be the best sector. I said the one with the highest probability is probably copper. And then I said the one with the most juice is probably lithium. Looks like Rock Bottom Entries agrees. And I don't care if people agree with me or disagree. It doesn't really matter to me anymore. I formulate my opinions from what I see in the fractals, and lithium does look pretty dang ridiculous. It does look more ridiculous than even silver. What does that mean? Well, if the fractal sizings are bigger than silver, and he's got LIT divided by SIL here, and he has a potential bottom. So he's looking for a gigantic move where lithium's going to outperform the silver miners, and I would agree with that. But some of the lithium companies, we took positions a few months ago in them when they were basically bottoming. So now they're turning higher. Some of the one of my lithium companies, it's up dang near 200% already. And I bought it not even that long ago. And I bought it before that too. I was cost averaging in at the the double bottom. And then I don't know. I mean, with this type of leverage, it's not about, a lot of people, what they do, I'll just try to describe it. They put everything in one sector, everything in a few companies. I just don't play the game like that. I want to be able to survive. I want to be able to be super resilient. So the way that my approach is when I look at these things, I'm not trying to maximize my returns every single year. I know that sounds weird. What I'm trying to do is maximize my resiliency. I want to be able to last a very long time. I kind of want to smooth out the portfolio returns a little bit, make it a little bit easier to psychologically hold. So I don't go gangbusters in one sector in a few companies. And I probably could, and I could probably have much larger returns while taking on a little bit more risk. But I just don't want the risk. I want to be able to have enough money in each of these sectors where I capture the big moves and the big gains. I get everything that I want to get out of it in terms of very large returns where I don't have to work ever again, and I get the returns and I don't have to take on copious amounts of risk. So when I see this and I see some of the retail investors, they just pile all in like it's their last rodeo. I just I don't do that. I say how much should I put in here? What should I allocate to make a difference? I allocate what enough to make a difference, and I allocated enough in silver to make a difference, and it's making a difference. I allocated enough to lithium, and I think it will make a difference. It's all about allocation to sectors where you don't ever blow up. Because if you have max resiliency, it takes all the stress off of you. And if you're not going YOLO in every stinking sector, it also relaxes you where you don't fear of missing out. There's no FOMO. So I allocate, sounds good. I allocate to silver, feels good. I allocate to platinum, feels good. And then you ride these all up and they kind of smooth the portfolio out in terms of volatility. And that's where I think the sweet spot is. It's not about who has the biggest returns, who can make the most amount of money in the shortest period of time. Because usually what happens is those people blow up at some point and then they just go back to zero. It's like a game-ending move if something happens, whatever it is. They go all in on uranium. Then they get frustrated and sell out completely because it doesn't perform in the time frame that they want. If you spread out, it's like the asymmetry just carries everything higher. Because if you put 10% in and it does a 5 or 10 bag in the entire sector, like it's doing in silver junior miners and silver miners right now, it feels fantastic, and I don't feel like I'm missing out on a single thing. And I don't know. I'm just talking off the top of my head here. I just think that's the sweet spot. That's where I feel the best. I feel the calmest, and I think having that calmness allows you to make better decisions. I don't feel rushed. I don't feel FOMO. I don't feel like anything. It's good. I like it. Silver cup and handle formation. The last one happened. Silver increased 50% before a relief correction. Same pattern now, but a little bit smaller. A 25% from current price would lead silver to 100, $103. I don't know. This looks like a cup and handle. This looks like some sort of ball sack pattern. I don't, I don't know what that. Yeah, it hits resistance. You break through resistance. Yes, it's some sort of pattern. It doesn't matter if it's a ball sack or a cup and handle or whatever it is. You know, everyone is so worried about the short term. I don't know. I'll just speak freely here. I kind of I don't care about the short term. And some people they get super excited. Like some of the companies we are in, they're up like 14, 20% in a day. And that really excites them. To me, it doesn't excite me anymore. Like, it doesn't even matter. And they'll say, well, why does it not matter? Well, usually after a 14 or 20% day, you usually get a pullback or a consolidation or something like that. And if you're in it for the long term, it doesn't really matter if it goes up 14% in a day or if you get, a couple of 4 or 5% up days. It doesn't matter. And then you got all these guys that are putting in these ball sack patterns in the short term here. Oh, we've broken out. We've got this. Look what I've called. Oh, come on. I mean, the 45-year cup and handle, that's like the pattern that you got to get right. These short term things, whatever. I don't think we're anywhere close to a top. I think the market conditions are going to keep silver in a bull market for many years. So it's great that we continue to get these bullish consolidation patterns. That's fantastic. And I'm glad that we're seeing them. But, trying to call this stuff in the short term, I don't know what it is, guys. Once you start making a whole bunch of money, you start to really focus on the long term. That's where all the money is made. And the reason it's made there is because no one else focuses on it. It's like the thing that gives you the biggest advantage is the thing that nobody else wants to do. If it's nobody wants to do hard work, nobody wants to wait for their big gains, no one wants to look at the long term. And that's where all the gains are at. The big gains are not in the small movements of the tape. The big gains are sizing up the big move. That and then being patient enough and waiting for the big move to play out and then ride through it over the many years. It reduces taxes, it reduces stress, and you make way more money. Way, way, way more money. But a lot of people, they're enticed to try to get rich quick. And I'm going to tell you this, that's going to be your biggest downfall. The quickest way to get rich quick is to not go after those types of short-term investments. It's to start doing long-term investing as quickly as possible. That is the quickest way to a lot of wealth. But I will tell you the path that most people take. The path that most people take is they get money, they start in penny stocks. They get their ASS ripped because they're in little penny stocks that they don't have any value. They're just trying to time short-term little market movements. Then they graduate to short-term swing trading, generally in stocks that may be a little bit bigger. They dump the penny stocks, they do swing trading. They don't make much money, they're not very successful, but they insist that they just need to find somebody who can read the charts and they can swing trade their way to success. Meanwhile, the guy who is investing in these big patterns and the big undervalued sectors, he's just blowing by him. Why? Because he's not wasting time with trying all the stuff that doesn't work. He goes straight to what works, learns from a mentor, buys cheap, holds on, and then he looks back and says, wow, I made a whole bunch of money. Now, things are moving quite quickly. We have another 10 bagger that was created on the website in the gold and silver space that we purchased a couple years ago. And so we're turning 10 baggers, and other people, they're worrying about 30% gains in the short term. You know how many 30% gains you're going to need to get a 10 bagger after tax? Good luck. Good luck. Tim Hack says we are now heading for a silver mania. So 10x your price targets, or you will miss 90% of the move. A lot of people already sold thinking a 2x or 3x was great. All those people will die poor. Okay, I don't know if I'd go to that extreme. But it's not about 10xing your price target. You're focusing on the wrong thing. Price isn't what matters. What matters is the conditions. The conditions is what matters. The conditions that people are subjected to that determine if they're going to buy silver or not. The conditions of interest rates and inflation, and the ability to hold as long as the market conditions are favorable for silver to go higher under. That's where you make the money. It's not selling at some arbitrary point of a 2x or 3x. That's all arbitrary. What matters is the conditions that silver goes up in, and are those conditions still present? That's it. It's that simple, guys. And go look at inventory. If there's no inventory, we're going higher over the long term. Long emerging markets, short US large caps. Is the Dalio playbook about to break out? So, yeah, emerging markets with the shoulder, head, shoulder bottoming pattern and a potential break higher. You know who's in emerging markets? This guy is. Yeah, I went around and looked at a lot of the emerging market areas, and I've got my favorite or favorites. There's two that I really like, and obviously EEM here is a good one. And the dollar's going to eat it. That's going to be the driving factor. And then emerging markets and their currencies are going to strengthen against the dollar, which is it's going to be money flowing away from dollar denominated assets to other currencies. So that's the play here, and that's the pattern that validates what I just said. Hi, Grok. What's the top 10 shorted commodities as of now? Silver, platinum, palladium, copper, crude oil, natural gas. These right here is like where I'm loaded. Yes. So yeah, the short squeeze is going to be on soon. This is where we're headed, boys. Weimar Germany or money printing. Yeah, that's where we're headed. I'm telling you guys, greatest political risk on earth is in the United States of America. Anything could be nationalized, seized at this point. Yeah, everyone always worries. Oh, this African country, I'm so worried about it. I'm like, no, America's the worst. America's your biggest threat. The one that has the most to lose is your biggest threat. I think that America is probably the biggest threat for nationalization of things. I agree with that. What we learn from history is that people don't learn from history. So true, though. So true. I love it. David Bateman says in 2022, when I sold my tech company, which built apartment software, I planned to roll my capital into apartment building ownership. After some technical analysis, I came to the conclusion that by 2030, apartments priced in silver would drop to 0.05 on the dollar and 0.10 for gold. I went with precious metals. As of today, compared to October of 2022, apartments in silver now cost 21.5 cents on the dollar, and gold is 27.5 cents on the dollar. My thesis is playing out, and I still hope to invest in apartments someday. Likely after 2030, most all assets will lose value in precious metals terms by 2030, in my opinion. I actually agree with him. In expansionary phases of real estate, where real estate prices go up, precious metals outperform during that time frame. So I can be bullish on real estate, but that's not the most leveraged way to play it. The most leveraged way to play it is actually through precious metals. And then you could say, well, you could do silver juniors or you could do um, uranium juniors or whatever. And those are also very leveraged ways to play it. And there's other areas too. So I actually agree with him. I think he's right, and he's probably making the correct decision. Copper miners are breaking out against the S&P 500. An 11-year base breakout is worth your attention. Dr. Copper is telling you something. So here's COPX, which is priced against the SPY or S&P 500, and it's breaking out. Maybe we get a lot. I call this the Loch Ness monster pattern. So the Loch Ness monster pattern is when you get these little moves like this, and then it's going to stick its head out and do a retest. That's the Loch Ness monster pattern. So it's the body of it, and then the head that sticks out, and then the retest. I call it the Loch Ness monster pattern, and I think we're going to see it right here. Lucas says they're going to run it hot. Commodities will outperform. The Fed already gave up on inflation, which justified them starting a rate cutting cycle. They started QE again. But this isn't enough for Trump. He wants short-term interest rates materially lower because interest expense on US federal debt is blowing out the deficit. Commodities are the best performers during inflationary periods, yet almost no one is invested in them. Commodity producers versus the MSCI World Index are down 62%. The world is invested for an era that doesn't exist anymore. Those are all linear thinkers. They haven't come over to this move that's going to go up where commodities outperform financial assets. So it's underway, and then people will chase. That's what they do. They're best at chasing. Nobody, not a lot of people are going to be smart money. They can't buy bottoms. They think that the trend before will continue into the future, and that's what they project. But this is going to catch a lot of people off guard here. Lithium stocks are about to become the #1 beta momentum trade in commodities. Future just went limit up at 22.4 thousand USD per ton. Most economic models use 24,000. Yet many stocks are trading at bear market valuations sub 2% NAV. You won't find faster 10 baggers. Yeah, I mainly agree with that. I think it's probably the most juiced sector that is in the market. And when it gets unleashed, it's going to run. And again, I've got in my midweek updates, if you're part of the website and you're new, go to the midweek update, and I've got my favorite lithium plays there. And then listen to the video I released, and you can see the ones that I would buy that have really good entry points if you're interested in partaking in the lithium trade, so to speak. Grady says, said at the lows in linked post, underestimating this chart is not a very good idea. Since then, silver miners move strongly. This proxy chart says the tide is turning. The capital rotation is in the making. Precious metal mining companies will be the new go-to stocks. This is First Majestic versus Nvidia on a ratio chart, 15-year bullish, falling wedge, a false breakdown, and now we're breaking higher, which will be around the apex move. And you could potentially see an outperforming move of 151,000%. You heard that right. 151,000%. Well, good thing I bought the bottom of a lot of these silver and silver junior companies. Now we're just riding it. And that's what I've got for today. So that's where we're going to end it. That's what I've got. Thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Special is the coupon code. And that's all I've got. So we'll catch you next time, guys. See ya.